Okay, it's Thursday the 20th of February. Banks had a wobble today. I'll go through that. First of all, we'll just go through the Aussie share market, bit of history for you. So essentially back in 2011-12, we formed this upward trending channel. We had a COVID dip, but came back up, and we've been trending and going, and usually a bullish outcome. We had this little upwards channel breaking the longer term trend, which is usually a bullish confirmation. So at this stage, from an overall market perspective, we're still within that channel. A drop below here, let's call it 8, well that's 8, call it 8,000 points, because markets like round numbers. So another 250 points to go, then things might start getting scary, and you'd look for a retracement of this move up here, 50% down to 7.6, so let's call it 7,500. But for the moment, on a long-term perspective, we're still in this up channel. So as long as we can hold 8,000, we're looking okay. But if we look at our banks, let's start off with the big boy. So Commonwealth Bank, you can see, I mean, that's just, you can't get a prettier looking chart than that. 2015, pick it up for $50. So in 2024, late 23, we took off. We've taken off from this nice uptrending channel. We haven't broken it yet, but that's a very bearish candle there. You can see we started the month here, went up, and we've come down. So that's a bearish hammer candle in terms of charting terminology. We're still within the trend line, so not panicking. But a break below, well, another round number, say $150, and that's not looking good. Potential targets are then 50% retracement down to 130. So no panicking until you get below 150. And that's the best of the banks. So if we look at the other three, so Westpac, so going back in time a bit, it hasn't been the big uptrend, especially like the CBA. It's really struggled to get above $23 for a long time. Then early last year it took off in one of those upward channels, and we've broken it, and that's a pretty good break. Again, you've got that bearish hammer candle. So the price was here at the beginning of the month, shot up, came down, and now, so that looks pretty ugly. That's a sell, and you target at 50% retrace, 26.50. So that's not very nice. Look at ANZ. Okay, so ANZ, a bit similar to the previous one. Nothing looked like that CBA chart, which just like that. But basically, once it broke 24 early last year, it formed a nice upward trending channel. We actually, I guess that was a bit of a warning. That's these are monthly charts we're looking at. So each bar represents movement in a month. So that was a couple of months ago. We got a warning on ANZ that it's out of the channel. Tried to get back up, couldn't even get near the highs. Got a bearish hammer candle, so that's definitely going down. First target $27. Now, if any of these retrace more than 50%, then that's not good. It's quite common for a bullish pattern for it to retrace 50% and then start to move back up again. So it's not end of the days, but in a retracement, 50% is common to come to. And then you see what price action does there. But this one looks like it's surely going to test that. Okay, so the other one is the NAB, which we got scared. That was, seemed to be the beginning, the bellwether ring the other day. So again, a different pattern to the last two. It's sort of been nearly looked like the Commonwealth Bank chart. But again, in that early 24, took off in the channel, nearly broke the channel, went up. Again, you've got a nice bearish candle, and it's almost at the 50% retracement. So it might have had a lot of its punishment already. So it's interesting, this uptrend line connects at about the 50% retracement. So what? How much is that? So let's call it $34. So you'll be looking what price action does at $34. If it can't hold that, then on all of these charts, if you can remember from before, look at the 78.6 retracement. So that'd be $30. All right, it's been a nice run for the banks, but for now it looks like their run's over. It's going to be pretty hard to. It's like Mike Tyson's just hit you, so doesn't mean you're not going to get up, but you're going to be down for a while. So I think it's a case of see what all those banks do once they hit their 50% retrace. CBA is not a sell, but it probably will be. All right, if you like my analysis, please subscribe. We've got a weekly video on the top ASX 300 stocks. All right, thanks for your time.